mission, but the numbers steer the ride. Conviction and precision, watch investors collide.
Hey, everybody. Welcome to the latest episode of the Fundraising Podcast, a podcast where we talk to the best early stage investors and ask them all the questions that you, as a first-time fundraising founder, want to know. We surveyed over 1,500 founders. We got the feedback. We got the questions. Hopefully, these interviews can help demystify the process. And I can't think of a better human being to take money from than Turner Novak. Break it away a little bit. I'm not gonna try to do bios for anybody. I want everybody to speak for themselves. Tell us a little bit about what you're doing over at Banana Capital.
Yeah, thanks for having me. I'm honored that I was chosen to grace everyone's airwaves. Yeah, name of the fund is Banana Capital. Invest 100 to 250K checks in, people call it pre-seed or seed. I just think about try to invest really early in people building generational companies that will compound for a really long time. That's kind of what's most interesting to me. Areas and industries, I'm fairly generalist, probably actually more generalist than most investors who tell you they're generalists, because I do invest in consumer stuff. I have invested in a CPG brand once, which most VCs will not do. I do invest in some deeper tech stuff. I'm probably out of this universe of people being interviewed on VC sheets, I'm maybe probably the truest generalist, and I will do pretty much anything. It's really just, can you build a company that can get really big, and can it be a public company? Can you do billions in revenue? That's really kind of the thing I'm trying to answer at the end of the day, and I just think it's really fun. So that's a little bit more about me and Banana.
I love that. And we'll talk more, we'll dive deeper into it. But a couple of things that you said are really important for founders as you're looking out there is when you're doing your research, you do got to go a little bit deeper in understanding what they're investing, check size, all these things. We'll dive deeper into what you need to know when you're going into these meetings. But let's go into the questions as a quick refresher for folks listening. It's going to be rapid fire. We're going to go through around 15 to 20 questions today, and we'll give you all the information that you need, hopefully, to have a successful fundraise. Let's start a little bit more with you. We'll dive deeper. Why did you choose to get into VC? What were you doing right before you got into VC?
Right before, I was working at the endowment of a nonprofit that does cancer and epigenetics research. So our team is you have an endowment portfolio. You have, at the time, it was 1.6 billion, and you invest across every asset class. That's hard to do on we want VC, so we're going to invest in this pre-seed stage startup, or we want, exposure to mines in Australia. So we're going to go, visit the mine. So you just give the money to people like venture capital firms, to hedge funds, to give you that. They're like your experts that you give money to, and then they deploy the capital for you. And I just grew up on the internet. I grew up liking technology. I thought it was fun, and I really liked investing. And you just kind of think of the intersection of all those things as VC. And I ended up starting my own fund because I just kind of grew up watching my mom have her own small business. And I just kind of thought I would start a business one day. Just kind of think about the intersection of all those things. It's start your own venture capital fund to invest in and help founders that are starting their technology company. That's basically how it all started.
Yeah. A lot of people don't realize that, VC funds are startups, which maybe ties into the next question here. What is your favorite part about the job in being a solo GP in a fund? And what's your least favorite job or part of the job?
Favorite part about being a solo GP, it's basically your thing. Your name's on the door, you make all the decisions, you do everything. If you want to, I'm going to a water park with my kids for a couple days in the middle of February in a non-standard vacation time, you can just kind of do that. Also, I can work, 16, 18 hours a day if I have to or want to. Sometimes it's both of those things. And you just get the flexibility, when you're an investor, but you're at another fund, you have a boss, and you might have a directive of can't invest in this category, or I must invest in this category. And that would be my least favorite, is you have to kind of follow the rules, and the kind of you're like an employee of someone else. Ultimately, I think most founders can probably kind of relate to wanting to run your own thing, wanting to make your own decisions. Also, the least favorite part is I've raised money from other people. I'm not a billionaire. It's just a lot of work. My funds are pretty small, so it's pretty similar to raising a pre-seed or seed round, but instead of stopping when you get to $1 million, $2 million, you kind of keep going until you get to around 10 million. So it's just kind of like perpetual fundraising. It's my least favorite part, but you kind of understand what founders are going through when they're raising, so you can kind of relate a little bit. It's not quite the same in both directions. It's easier and harder in some cases. So that'd be my least favorite part. Kind of like the fundraising, and then also there's ops, compliance, legal, the same things you kind of have to deal with the founder on the founder side starting a company. It's the same thing on a fund, potentially sometimes worse and less fun. So
I would agree. It kind of ties into the next question too. You're doing a good job of rolling through. What's something that founders don't or should know about being a VC? And one of them might be fundraising. Like you have to fundraise too.
yeah, I mean, I think that's a way to tie into how you pitch yourself and talk to investors is you're sort of their customer, but you're also their product. So if they invest in you, you're sort of the product that their investors are investing in. And they might want, quote unquote, exposure to AI or exposure to the certain trend or category. And if you don't fit into that bucket, or if you do, that's something to just kind of think about as you're navigating this. And then also like, just when you're talking to investors, like understanding where they kind of are in the food chain. Are they an employee? Are they, the equivalent of being like a director, having a budget that they can have say over and write a check? Are they the founder of a firm that can just make a call by themselves? Like how many people do they have to convince? Every investor probably, if they're running a fund, has to convince someone, and whether it's a boss or their own investors. I would incorporate that into how you think about your pitch. And it's ultimately just, will they make money if they invest? Like that's, at the end of the day, that's what everyone's trying to do. They're trying to make money. So I would think about that.
Yeah. All right, last question on the introduction side here. You mentioned you're a generalist, you're investing across the board, but are there particular industries or verticals that you're personally most excited about right now?
Am I allowed to just kind of say a couple?
Yeah, totally.
Yeah, I think that the kind of food system in the world really it's kind of messed up. It's incentivized towards keeping food productive and eatable and edible for as long as possible, not necessarily make us healthy. And I mean, it's trillions of dollars a year. It's a massive market. Most of them are public companies and owned by passive shareholders. So I think as a founder, it's an interesting opportunity. $1 trillion market with competition that's asleep at the wheel. And that's kind of why I have a little bit of an interest in CPG. I just think that there's opportunities there. I think like everyone, I'm interested in AI native products that basically do work for you. I think you can read blog posts and tweets and other podcasts about that. It's a pretty big opportunity. I am also interested in just building real things, solving hard problems. So if you've come across something that you have a unique expertise in, it took you like a life's experience of work, a body of work of understanding and learning this thing, and you are uniquely positioned from 10 or 20 or 30 years of experience to solve this really hard problem that you have figured out how to solve. And it's just hard to compete against you because you've earned the right to solve this problem. And that can kind of cover a lot of things, whether it's in software, deeper tech, like a consumer category. I think housing is a pretty big problem in the US right now. I think it's tricky to invest in just like a home builder or something like that. Or, we've kind of solved some of these things with Zillow, like home discovery. We have Open Door that's maybe trying to improve the process of buying a home. But I just think it's another market that's trillions of dollars and talk to most Americans. At the same time, I think healthcare, it's like 20% of GDP in the US, and most people just don't even know what the price of anything is. It's usually 20 to 30% of your income that you're spending on health insurance, and then you pay even more when you go to the doctor. Like it's just kind of messed up. It's kind of a messed up industry. So ways to make people healthier, maybe that ties into food, maybe not. Those are, probably covers the majority of it. But yeah, it's really massive market. You solved a real problem. You can make things better for the customer. That's ultimately what I'm looking for. And I think maybe one other flow through of that question is I have a lot of people that follow me on the internet. So I usually look for backing founders who can benefit from the distribution that I built up. I have, almost 200,000 followers on Twitter, and I have about 250 if you just count newsletter, LinkedIn, TikTok, Instagram, my podcast. And I'm just kind of trying to find founders where, I align with it. I like what they're doing. It matches my thesis, but also I can materially move the needle for you. And just in terms of having people know what you're doing, whether it's customers, recruits, other investors, different suppliers or third parties that you might be working with, and vendors. It's kind of across the board. So that's typically what I'm looking for.
I love it. It just shows that there's so much opportunity everywhere right now, which is exciting. All right, going into more of the fundraising process itself. The way that I always like to think about the fundraising process for founders is there's almost 3 phases. The first phase is, how do you get in the room? How do you get the meeting? How do you go from, I don't know anybody in VC, I haven't talked to any investors, to you're now talking and having meetings with investors? The second phase is you get the meeting. How do you execute in that meeting so that you can get follow-on diligence and then go into the final round and close? And then the final piece is closing the round. So starting in the getting in the room, what should founders be looking for? If I'm a founder and I'm going to fundraise, what do I need to look for on VC Sheet or other research? Where is it a sector thing? Is it an early stage, late stage? Am I looking for specific investors, people? What advice would you give to founders that are just starting this journey and that research process for found?
I think that is a 1 to 2 to 3 hour long question to really get to really unpack all the angles. But I think ultimately it kind of ties back to what I said earlier, is that every investor is trying to make money, and they all have a strategy for doing that in an area of expertise. So you just need to think of, if I give this person, if I'm reaching out cold or meeting them for the first time and I have 10 seconds or 30 seconds to kind of tell them what I'm doing, will they think they can make a bunch of money if they give me money? That's how I would think about it. And you need to customize that conversation and that pitch for basically everyone. But so whether that's you have a really incredible background to solve this problem that you're doing, or the company has X traction in your chart, looks like a hockey stick going up, or you have other people that have already supported you, or you've accomplished different things in the past that kind of indicate that you may be able to solve this problem. Maybe it's just that the market is really big, or that the market is changing and growing fast. Maybe it's that the competitive products aren't very good and why you're 10 or 100 times better or faster or cheaper. I think those are maybe all things that you would want to figure out how to convey. Those are ultimately all things that people are looking for. I mean, basically investors are looking for, if I give you money, how fast and how much will you make more money for me? And like I said, there's a lot of ways to answer that question, but that's ultimately what everyone is trying to answer, and everyone's doing it in a different way.
Yeah. I'm going to tie that one. That was one of the questions later. I think that was a good answer for what are folks even like looking for in some of these early pitches as a VC. And you kind of hit on a bunch of those there. As far as like the process of, I'm a founder, what would you recommend, like the reach out process? Should I be DMing people on Twitter, reaching out on LinkedIn, sending them flowers in the mail? What are the best ways for founders to get their pitch in front of VCs? And then maybe at the tail end of that, what's a wrong way, what's a red flag way of doing that?
Yeah, I think the one thing you need to think about is there's a lot of founders that are basically trying to do the same thing as you, and they're probably sending messages to investors. And investors are also getting a lot of other email, and they only have a certain amount of time they can prioritize. So you just say, VCs work 8 hours in a day. They do 8 1-hour meetings. Are all of those new founders? Probably not. Some of them might be a follow-up call with someone. Some of them might be internal on their team. They might need to hire someone. They might be helping portfolio companies do things. They might be fundraising. They might be doing a legal compliance thing related to the fund. And there's some times where you might have more people on the team. Like you might have some people on the team, their only job is to take introductory meetings with founders. So they maybe have more slots than the average, like seasoned investor. But really the thing to think about is that VCs just can't even talk to all the people that reach out to them, and they kind of have to prioritize. So usually for that first, if you're coming kind of reaching out cold or getting introduced for the first time, or they're coming across you for the first time, I mean, you probably have to be in like the top 10% of just interesting, this will potentially make me money things that they're looking at in order to kind of jump on that first call. Ways you can kind of get into that top 10%. If you are reaching out cold with no connection to them and just hoping they'll read it, you might just have a bad subject and they just delete it without opening. And that's something you got to think about. You might have, let's say you worked at a company that was in their portfolio before, and they met an employee, like your boss, that the investor knew. That might be a way to get introduced. Or if you know the founder of the company and you worked with the founder might be able to introduce you to the investor. Let's say you like fixed a critical issue with the product, or you closed the biggest deal in the history of the company and you made the founder and the investor a bunch of money or whatever. That's a pretty big proof point. I think the biggest thing I would look for, it's someone who was your boss introduces me to you. I think very highly of your boss, and your boss says something like, this is my best employee. I don't want them to leave. I'm trying to convince them to stay because they're just amazing. And I haven't been able to convince them. They're starting a company and I'm investing. and I'm trying to help them raise their round because I just know that they're going to crush it. I mean, that is probably the most on a silver platter type of introduction to an investor, and you're competing against that if you don't have that. And then there's other elements of, how impressive that scale is. Like, let's say the most extreme example I can think of, everyone wants to invest in Anthropic right now. They're probably like the best AI company. And Dario at Anthropic introduces me to you and says that he's investing because you're amazing and you built Claude Code or something. And, every VC will be like, oh yeah, I don't even need to meet you. I'm just going to wire you a blank check that you can put the money in. So you want to hit on that spectrum. You want to be as close to that I just described as possible.
Yeah, it kind of hints to the first question too of finding the connective tissue is one of the filters that you should use when reaching out to VCs. Figure out if you have a friend or a boss or somebody that knows a specific VC or fund, and then use that as, a short list of funds that you should reach out to. A specific
and
question
I think
that we had asked. Yeah.
Oh, I was going to say,
ahead.
and I think the way to think about that is like, as a founder, you have to prioritize your time. And a lot of investors are kind of in the same position where you just have to think about how can I make them prioritize me? How can I make them think that what I'm doing is important? And it's not like there's usually not like a negative thinking. Like every email they open, they think like, oh, this sucks. I don't want to do this, blah, blah, blah. It's just that like, man, I have so much to do. I need to figure out how do I prioritize. So I was just thinking about how do you make them prioritize you?
Yeah, I like that. A specific question that we got from founders that were curious was, does having a well-designed pitch deck really matter? And maybe that translates to having like a website or a brand or something that feels carefully designed.
I think so, but not in the way that you would think. So when you say well-designed, it could just be like white background with black text and like it's designed well and like it conveys the information. Honestly, some of my favorite decks are companies that are going through YC and presenting at demo day. It's literally usually
They
like
do the best decks. I know.
Yeah. It's usually like 4 to 10 slides. I mean, usually like 6 or 8. And it's just like extremely compelling problem that you can resonate with. It's like, oh, this is a huge issue. We've solved the problem. Here's the product. Here's why it's a big market. And like, here's the team in our background. And like, that's the deck. And it's sometimes like 4 or 5 slides, but it's designed well in the way to convey the information. One interesting stat that one of my portfolio company founders told me, Austin Peter Smith at Howie.ai is the website if you want to check it out. It's like a AI executive assistant that lives in your inbox and plans all your meetings for you. It's pretty cool. He looked at a bunch of DocSend data, and basically every investor spends about 3 minutes on a deck, whether you have 5 slides or 50 slides. And so it almost doesn't matter what you put in there. You probably get 3 minutes on average. And some people might give you 1, some people might give you 5. But I think the format that works really well is really bold headline. Like you want to design it so people will just look at your titles, like your biggest font. And then maybe there's like some supplementary information that people can dig into if you want. But you really want to design it as if they're going to spend 3 minutes or less on this thing. I need to put all the information that I can to get them interested in meeting me and talking to me, not necessarily convince them to invest. And I think about like your website is like a representation of what a candidate or a customer might look at. And honestly, a candidate's probably going to spend more time thinking about joining you than an investor thinks about investing. Like if they're going to bet,
especially good
like
candidates. Yeah.
Yeah. And like an investor has a portfolio of maybe 20, 30 investments that they're making in a fund, and they might be 10 years, 20 years into their career. So they made like 200 investments, and, that might be an hour. They spend an hour thinking about this and all their pattern match. Like, oh yeah, this makes sense. But a candidate is like, I have kids, I have health insurance, 401k, I have a mortgage. Do I trust you with my life and my this stock you're giving me is my retirement plan. So they might be spending a week full time thinking about this and doing research. So I think you really want to make sure that the things that you're conveying on your website, marketing materials, etc., also is well designed in the same sense of like, do you convince people to do business with you and partner with you, essentially? So I think it's super important, but not in the sense of, oh, it looks like you paid an agency $50,000 to design this thing for you. That might be the case, and that might get you a really great product, but you don't necessarily have to, in my opinion. It's about how well is it designed, not how pretty it is. Like the design is like conveying information and convincing someone to make a decision.
All right. So let's say that everything that you just said was great. The founder crushes it. They go through, they get the meeting. Now they need to crush the initial meeting. So this is going into that first meeting that you have with a founder, first time you're meeting them face to face or over Zoom. First question is, what are you looking for in that initial founder meeting?
I'm trying to ultimately answer, like, do I think that this founder can build a company to get to billions of dollars in revenue? You can look up all the things about how VCs do their calculations and all the size of the market, how big the company needs to get, design their portfolio, etc. I'm usually like the first person in the food chain. When I did analysis of my last fund, I was the first fund or the largest investor for 78% of the portfolio. So I'm usually like the first big check that's like, hey, I'll give you some money, I'll lend you my credibility, I'll help you out with stuff. And so I'm ultimately looking like, do I think you'll be able to go through this gauntlet of what it takes to raise venture capital and go through all the honestly bullshit that you kind of have to do and then build like a big business at the end of the day. So I mean, that's ultimately what I'm looking for. And it's, do you understand your customer and what they need, what their problems are? Can you expand that initial product with the customer? I think generally you want to get to a point where you can have some customers that you make over $1 million in revenue from. If you look at any public company, there's some exceptions to this, but most of them, you really only have thousands, tens of thousands of customers. And there's some that might pay you 7 figures in revenue per year. So I'm ultimately looking for like, do I think you can get there? You usually need about 100K. You need to be able to prove you can get 100K per year revenue customers, usually to raise a Series A. This might be like it's not 100% true, but that's generally how I think about it. So then I think about, okay, can you get to that 100K number in the next probably 2 years? Like if I'm investing today, you're probably going to run out of money in 2 years. So you probably need to get to that point. So a lot of it is just, can you make progress? Can you build a product quickly? Do you move fast? Is there like a sense of urgency of just, I need to accomplish this and build this thing because your investors want it, whatever, but also like the world needs it. Like we need to move quickly because we need to be the first to do this or the best or the correct way of doing this. Are you able to convince people to hire you or to work with you? Can you hire people? Can you convince them to join you? Can you sell the vision? Being able to fundraise is really important. So I kind of think about that. I've had portfolio companies that just can never raise money and they just kind of run out of money and die.
Even if
could
the
be a
is
function.
Great. I see that all the time.
It could be a function of other things. Like they couldn't raise money because of, whatever other issues, but you generally need to be able to raise capital as like a skill set. Sometimes that can be learned. But it's like, do you think that they'll be able to learn certain skill sets? You don't have to be able to do all these things today. I think a lot about how fast you'll learn new things. Like, will you be able to delegate effectively? How do you just think through problem solving? Like, are you able to evolve quickly and learn new things at a quick pace? I do think about the market and like how excited I am personally about not only investing, but also potentially helping you, because I generally try to not be dead weight. I mean, I'm pretty hands off. I try to be responsive. And if you need help, I try to help you. And just, I think about it as a shower test. Like if I'm taking a shower, would I like come up with an idea? Like when my mind drift to what you're doing and think about, oh, my friend Matt is a really good designer. You should work, I'll introduce you guys because you were hiring for a designer. And if I'm just not interested in what you're doing, I won't do that. But if I am interested in what you're doing, I'll just naturally be thinking about what you're working on. And like, I think you want that from an investor, someone who actually cares. So those are maybe all the things I kind of think about. And that was maybe a little bit of a long answer, but again, it ultimately comes down to
it's a good one.
Yeah, I think it comes down to just, if I give you money, will you make a bunch of money? Like it's the most capitalist way of thinking about it, but there's all these different kind of things that flow out of that.
Yeah, you answered 2 questions there, which I think is great. The one of like, what are you looking for? You hit it on the head. I think a lot of VCs, they just want to know that you're building a big business. And I think that's one of the biggest mistakes I see founders do is they don't make that evidently clear right away. And a lot of times people are looking to raise capital when they don't have a big business available, but you need to show everything that you can to make sure it is. And then you also hit on another piece here, which is what are some of the green flags that you look for? You mentioned a few of those, your ability to pitch and fundraise, convince people that what you're doing is worthwhile, your own ability of being interested in it. So the curiosity that you have as a VC is there. The next question that kind of ties in is the opposite of that. What is a red flag? What's a red flag when founders start talking or doing things? Maybe it's the exact opposite of what you said. It's not a big business and they're not interesting or can convey that. But are there other red flags that you've seen that immediately send you running for the hills?
Yeah, probably. I mean, on the most extreme end, like fraud, lying, stuff like that. Just like extreme examples that hopefully are self-evident. I mean, other ones, yeah. Maybe I just don't think that you can build a big company here. Like, and that's always subjective. Like, I'm sure there's been tons of companies where, like, if I got their pre-seed or seed pitch, I would say, yeah, that probably isn't a big market, and then it ends up being like Coinbase or Airbnb or something. And I think the thing to clarify there is it's okay if your initial product or market is small. It's just I think about, can you acquire customers you can expand with and help them more and add more value to them, and then you can generate more revenue. So maybe, I don't know, yellow flag is like not having thought through that as much. I mean, I think a red flag is not really understanding the customer and what the customer needs and what they'll want. Not having thought through like what the business model ultimately will look like, or being open to discussing it. Because again, I think a lot of these things you don't have to have solved. Like, to be a public company, you need to hire a CFO. Like, you don't need to know the answer of what a good CFO looks like, or who are you going to hire as your CFO in 8 years when you're starting the company, right? So I think it's okay if you don't know these answers, but maybe knowing what's important, what to prioritize, maybe like a red flag is not understanding the nuance behind something, like too many buzzwords and then not being able to explain them to a normal person. I think a lot about, if I talk to my grandma about this, could she understand what you're doing? Or is it just like, we make AI modernization products for the modern enterprise. You're just like, what did you just say? Like, what does that actually mean? And maybe that's a great company, but also maybe it's not, because like it doesn't mean anything. So maybe that's another pretty big red flag I look for. Is also when you're looking at your market, like, yeah, at a high level, you can say this market is $500 billion. But I think you also need to look at it on a customer basis. Like, we are acquiring customers that become customers of us, and we generate revenue. Like, realistically, what does that look like? And you might be able to say, fintech is a $5 trillion market. But what is that even? Like, when you actually break down what you can actually do and build in fintech, I mean, your initial product with initial customers might only be like a $200 million market, which on the surface sounds really bad. If you stop there, no VC would take that meeting. But then I would be looking for is like, well, this is the opportunity to expand with those customers into serving other products. And then it actually, maybe that's how you get to the $5 trillion TAM. I don't think that's actually a reasonable TAM number. I don't think anyone has a market that's over $1 trillion. But yeah, those would be kind of some of the red flags I'd maybe think about or look for.
I love it. So let's say that you're going through the process, and typically as a founder, you forget that it's an interview that goes both ways, right? You need to be able to ask the right questions to figure out if the VC is going to be the right fit for you. What are some of those questions as a founder during this first meeting that I should be asking specifically to the VC to know whether I should continue following along with this process too?
Probably try to book a follow-up call. I mean, VCs probably know. I feel like most of the conversation someone has relatively early, or even by the end of it, they kind of know if they want to do another conversation. So honestly, just try to book a follow-up call. I mean, this is a sales process. So if you look at sales best practices, honestly, sales best practices is like constant follow-up on different channels, get their text, like get their number to like text them and have another touch point, always be giving them a different piece of information. We just closed we closed, we're a crypto company. We closed Brian Armstrong, the CEO of Coinbase, as like an angel. Having these different, or like we just went live with a new customer, like we're a Bitcoin product and we're now listed in Coinbase or whatever. Like, that's another kind of update that you can give. And don't say like, hey, just checking in, like, did you have time to think about this or something? You want to show momentum and like things are happening. And that's ultimately what most VCs are looking for. So yeah, I would say like ultimately you want to try to get a second meeting. Most people are probably not going to make a decision on just one 30-minute meeting. Me personally, I kind of like to talk to the founders for 2 hours, maybe 3 hours over the course of time. I like to meet all the co-founders. Like, sometimes it's surprising. Like, I'll be the only person that met the CTO, which is always kind of, my opinion, is kind of shocking that like you want to meet the person who's probably building the product.
Yeah.
And so I mean, that's another tool you can use, is like, I'd like you to be my co-founder in the next call. So yeah, I would say just, you always want to have like an action item. And if the investor doesn't show like a willingness to move forward within 24 hours, 95% of the time, it just means they're probably not interested. Of course, there's exceptions to that, but I would just always be thinking about how do you get like a next step. I think honestly, like a question you shouldn't ask is like, what does your process look like? A lot of people kind of ask that question. I think people say that that's a question you should ask to like show you're thinking about it. Every VC pretty much has the same process though. I would ultimately like the real thing is like, do you want to have another conversation about this? I would say that's like the ultimate yes or no.
That's a good
choke
question.
Point you
that
probably wanna figure
summarizes
out.
even the next meeting thing.
Yeah, because there's been so many times where a founder will bring that up and I don't want to do another meeting, honestly, like candidly. So I would try to get them just set it up during your call, pull up each other's calendars, try to schedule something. And if they don't, it means they're probably not interested, or there's some other reason that's maybe makes sense, but most likely they're probably going to be out. So just get it done with, just skip to it. And then too.
The ultimate question is to ask if they want to keep talking.
It's the hardest question. Like I would say like that
It
is you're
because
probably
you don't want
going to
the
get
answer
no.
sometimes.
Yeah.
Yeah.
And the answer is most likely no. Like on average, I think that people say like, you'll see VC say, I take 1,000 pitches a year and I only invest in 10 companies. So it's like a 1% conversion rate ultimately. So you're probably going to get no, but you just have to keep getting more no's. And then eventually you get a yes. It's a pipeline thing. Just get as many names in the spreadsheet as you can, talk to as many people, and just move on from the no's because they're going to be there and you're not going to convince them otherwise. But people who say yes, they were preconditioned to say yes. You just have to find them.
What's a common mistake? If you could think of one mistake that you see founders make during this process, so in that first meeting, what's a big mistake that you see founders make often?
Probably not getting into it pretty quick. Probably not. I think there's two sides to that. You don't want to just jump in. Like you join the call and be like, hey, my name's Turner. Like, let me tell you about my startup. But also at the same time, it's like you don't make it interesting quickly. So I think you want to understand more about the investor that you're talking to and understanding what they're looking for, and then like immediately make it interesting to them. Because when I think about that, it's not just how you're like pitching me on this, but just it's like this guy's never going to close customers because it's just he's not getting to the meat of it, or like I don't know if she's going to be able to hire anyone because will she convince candidates and people and talent to people to come work for her based on this conversation? I don't know. Like it just doesn't seem like an inspiring person to work for. So I think you got to understand do the discovery process of the investor you're talking to and like make it interesting for them and like tie it into what they're looking for. And honestly, sometimes that can take a lot of work, and maybe that's like not a fair thing to put on a founder. But I think that is something that people mess up a lot. Not just for me in particular, but just generally speaking, kind of broadly in how you're pitching what you're doing.
All right, the final phase of the fundraising process. Let's say you followed all of Turner's advice, you've crushed the initial meeting. You now need to close the round. I think a lot of founders, mostly because most founders don't actually get to this part of the process, but when they do, they're surprised at oftentimes how stressful and long it can be. Hey, we want to invest, to like actually getting the check and closing the round out. Could you shed some light? This might be a longer answer, but could you give a hint to these founders of what a typical diligence process looks like? And maybe even just speaking from your own side, like what are you doing when you're diligencing a company? You want to invest, you're in that final phase. Shed some light on that diligence process.
Yeah, I guess I can give you like the 2 minutes on it. If I haven't quite, let's say I've met them twice, I'm basically just trying to figure out, do I trust them with the capital? Like, will they be able to build a company with this? You're maybe trying to do some reference checks. Sometimes it can be helpful talking to other investors that have already seen you work or have already committed to the round. They might tell me a piece of information like, oh, we talked to all the customers and like, this is a huge problem, or it's not. You also might be looking for just any, potential like trip ups of like, oh, there's like 18 other companies that kind of do this and this product doesn't seem quite as good based on feedback from customers, or the opposite of like this product is amazing based on customer feedback. For me, honestly, maybe my process is kind of unique because it's just me and it's just my fund and I have like the capital sitting there in the bank. Like I just kind of sync you up with my fund admin. We do all the closing docs and we wire you the money. And it's basically just like whatever pace you're closing the round. honestly, I usually try to wire as fast as possible because I've had it before where you kind of like miss out on something. Like let's say there's, you wanted to invest a certain check size and it gets taken up by someone else because you just sat there and waited. My philosophy is I decided I'm just going to send you the money right away, and other people can deal with not getting their check size. Honestly, as an investor, I think you want people that like are just, they want to give you the money no matter what. On the other side of that, I think there is actually a risk to, let's say I invest 100K in your pretty capital intensive, complicated project, and then no one else comes in. My money's tied up, and like that's super risky, honestly. Like you just think of like, ultimately you want to mitigate the risk in this stuff. That's ultimately what investors are doing. They mitigate the risk by like the market being big, having real customers, having revenue, the company is whatever size already, et cetera, et cetera. Other investors are already on board. These are all things to think about mitigating risk. So I generally try to make sure, if I'm the very first person, that you're not going to run out of money immediately, or I probably know some other people that can probably come in, and I feel pretty confident like we'll be able to raise you the money. So that's maybe going into it. Yeah, I mean, that's basically it on my end. On other funds, like you got to get approval. There's a process for how they like write a check. Like Matt might have brought in the deal, but Matt's not the founder of the firm. So like Jerry, who started the firm, technically has to meet you and sign off. One thing I tell founders to be wary of is SPVs. So what an SPV is an investor will go out and raise money just for your specific company, not as part of their fund that's already kind of raised. That can be good and bad. The downside, I'll just go into the downside of it, is that it might take a while. Like they don't have the capital raise, so it might be hard for them to raise the money to then give to you. There's also the function of they don't have any reserves kind of put aside for like if you need a little bit more capital. You can't really bank on just an SPV they have to go out and raise another one, and they have to tell their investors, hey, this company that we thought was going to be a rocket ship has to raise more capital, and it might not be a good thing. I've had before where that's kind of been something that kind of trips founders up, but also it can be a way. There's some groups that's their model and like they're really efficient at it. So I would just make sure they like ask them how many they've done, how many SPV they've raised, how often, what kind of other companies they've raised SPVs in. It's usually easier when you're a later stage company and it's like, here's a spreadsheet, here's all the numbers, it's working. OpenAI and Anthropic have been raising a lot of their capital through methods like this. So it's like it's not an uncommon thing, but just something to be aware of, I would say, when you're going through that process.
It's definitely less common at the earlier stages, although we're seeing that more often these days in some cases. But I think you highlighted another point that founders don't realize is that you said it, you're an early stage VC, you want to get in early, so you write your check early. But there is, and it happens all the time, very often. I mean, it's common enough to where you think about it. You put the check in. This is why VCs are always a little bit too annoying about, do you have a lead? Who else is in the round? I think a lot of founders look at it as like, well, they're followers and, they don't have conviction and all those things. And maybe that's true, but it's also that as a VC, we've had it multiple times where you give a little bit of capital, no one else comes in. You don't really ask for the capital back because the founder kind of needs it. So they're going to try to do the best with what they've got. And then, the ability to create a successful company without the funding that you set out to go and get, it's not a nail in the coffin, but it's kind of close. And so it is tough. So for all the founders out there, that's the reason.
Yeah, you might have only raised 2 months of runway, right? Like I gave you $100,000, you use 50K a month, and then you're just back to fundraising again. And no one wants that, honestly. I want you to be able to not focus on fundraising for at least a year. Sometimes it's like 18 months, sometimes 24 months, sometimes longer. So like that is why I think a lot of me personally, like if there's no one else in, I'm like making sure, okay, I think Kevin does 500K checks and I think he's probably going to come in, and I know like 6 other people and I bet I can get you like to $1 million bucks and like we'll solve for this.
Yeah, I like that. So let's say you're a founder that's oversubscribed. It's a good problem to have. It happens a lot. It's surprising how stressful it can be when you have a competitive round, and they usually happen at the end of the process. What are some advice that you can give to a founder that's maybe in this position right now? They actually have to pick and choose, good problem to have, some of the investors they want on the cap table. what should they be looking for to help make the final cut of which investors to allow in?
I would basically say there's like this first maybe like bar. It's just like, do you trust them? Do you want to potentially have to work with them on good and bad things? So you like just trust them that they will honor your, I guess, like opinion and thinking as a founder and like the value of the equity that you're creating for yourself and for your family. So that's just like, you can be like, will they fire you for no reason, or will they like make your life hell? Or also, if you do decide to step away and like it's your decision as a founder, will they still be on your side of even supporting you stepping away if you need to? I think there's also an element of, I think that's probably the first one, is just, do you trust them? Do you trust them to like own part of your company? But there's a second element of like, will they increase your chances of success? It's really hard. You just look at the data. Most startups fail, etc. Sometimes they fail because there's like an investor that's like suing the company or and spending a bunch of time and resources, or like leaking information to competitors, or I mean, that's probably like the worst it could possibly get, but like, that's not good. You don't want that. Also, will they be able to introduce you to customers? Could they maybe help you hire some people? Will they be supportive, helping you continue to raise capital over time? These are all kind of things to think about, is like, will they just increase your chances of success? So I think like at a base, if you don't have any options, like if you're still kind of getting to that point where you're oversubscribed, just make sure you trust them and that they're not going to mess anything up for you. And then once you do get oversubscribed, it's probably like, who do you want in your corner? Do you feel like they'll increase your chances of success? And with the topic of being oversubscribed, like every oversubscribed round was undersubscribed at some point. So, and it always happens at the end, right? Like it's the last day or week or whatever.
You go from being like starving to all of a sudden it's a problem you're not used to. And then VCs can be a little bit scary when they want something, and you end up having to say no, and it becomes a thing. I know it sounds like some of the founders out here are like, I want that problem. And you do, of course you do, but it can be stressful still.
Yeah, it's annoying. I don't know. I haven't had too many portfolio companies have to deal with it. I mean, the thing that gets harder is an early stage investor. When your companies get further along, it's just like you just have less say. Like your company's doing hundreds of millions in revenue, and you have like the big fancy funds that are like, hey, we'll give you a ride in a private jet. I mean, that's not something I can really compete with. So you kind of, it gets harder at that point. So that's why I like investing really early, having a good relationship with them, kind of become friends. How can you help them out? And then you continue to just help each other as you go.
My guess is that I obviously did not raise capital from you, Turner, but I think I could see you as being one of the investors that I would text when I needed help the most. I look back at my own cap table. My favorite investors weren't the biggest ones necessarily. They were the ones that I felt the most comfortable texting at midnight when I can't sleep because, I need to fire this person, or, this customer left, and you need to have those people in your corner. So finding those people, I think, is critical.
Yeah, because again, it comes back to, will they increase your chances of success? Like if you're stressing about firing this person and you don't do it for 3 months, that's probably not good. Like your intuition was probably correct. And you want people that will like enable you to lean into your own intuition, because that's the reason you're the person that's starting this company. Is like you're individually like the best to do this, and you have the most earned life experience and understanding of like what is the right thing to do. So you want to just find investors that you can trust and maximize your chances of success.
I love it. All right, the last few questions here. We'll do these more rapid fire. They shouldn't be as detailed as the other ones, but what happens next after the round is closed? You've closed the round, you have a cap table. How should founders think about the relationships with their VCs after the raise? This one's a little bit longer, but what should founders expect? Because I think if you haven't raised before, the round closes. Sometimes VCs disappear a little bit. Like it's all of a sudden they're on to the next one. Let's set the expectation for us. How should founders think about that relationship after they've closed the round?
I mean, I don't think they should expect their investors to do much, candidly.
It's true.
It's nice to have somebody who responds to you, and like when you have questions, to answer the questions. But ultimately, I think you should just expect, like, I don't want to say you should expect them to disappear, but like you don't want an investor that's like every day, like they want to meet up for lunch once a week and like ask you how things are going. Like, have you sold any new product yet? If they are truly helping you, that can be great. Like they're they're introducing you to a couple customers every week because you're talking about the pipeline constantly and you're like, they're actively trying to help. But you don't want someone who's like, I want like a book report
No.
once a week on like how things are going. I don't know. I mean, I just think about it as like, I ultimately like you want them to do as little as possible while adding the most amount of value when they do. So it's probably like
Yes.
understanding what they're good at and then only tapping them or talking to them about those things. I mean, I'm kind of friends with a lot of my portfolio companies, with the founders anyway. So it's like, that's like a whole different thing that could be good or bad, candidly. But you're more inclined to help and be thinking about your friends' problems than maybe like someone who's not a friend. So I don't know. I mean, you want to build trust with them. Ultimately, your investors will probably help you a lot with future fundraisers. They'll probably introduce you to a lot of downstream investors. So you want to have touch points with them where they can see your progress. Most like a Series A investor will ask you like, oh, Matt, you just introduced me to Turner. Like, what's he like? Are you guys investing again? What's like, how has he evolved as a founder over the past couple of years? And you want the person to say, I'm investing again. They're like the best founder I've ever invested in. They move super fast. They've grown super quickly. Their product's so good. The customers love it. Like those are the kind of things you want your investors to be able to say. Sometimes that's even more helpful coming from an existing investor than you as the founder. So I don't know, share those things. Like I have one of my portfolio companies like send me screenshots of like customer feedback and stuff. And I know that it's happening. So when people ask me, I'm like, oh yeah, like people seem to love the product and I'm not making it up. He's literally just sending me screenshots. So yeah, I feel like it's up to you as a founder. Like you might be like oxygen to like, be usable on the moon or something. Like no one's done that before and like no one knows anything about that. So like you're not going to get much help from your investors and some of that tactical stuff. So maybe you do want to be a little bit more secluded and that's okay too. Like I just figure out what are your investors, it kind of comes into like do you trust them and do you think they'll increase your odds of success? It's just like, do you feel like how that working relationship can kind of vary?
Yep. Great. It's a process. It's a relationship, and those can be hard. The best part is that I found that just like many things in life, when you're winning, all of these things become easier. When things are going well, none of these things are really problems. It's when things don't go well where some of these things start to be problems. You have the investors that are creeping in a little bit too much, and you have to send the updates, and the updates aren't good, and it becomes a process. So just do really good. Try to if you excel, then things will be easier.
Just win.
Just win, baby, win. Okay, what's a common mistake you see founders make as soon as they raise the capital? So I've raised the capital. What's a big mistake that you see founders do right out of the gate when they've raised capital?
Probably spend money on dumb shit, like unnecessary. And it's not even.
What's the dumb shit that they spend on? Yeah.
It's probably just like hiring too many people too fast.
Yeah, that's a big
maybe
one.
Like too big of an office, which can be like, it can go both ways. So like maybe you do need a big office to grow into things, but I would just say like not managing the capital in a good way and running out of money too quickly and spending like, do you really need a Keurig
startup a little bit? Yeah.
Yeah. And it's also like, do you really need a Keurig in the office? Do you really need a ping pong table in the office? You might. That might be like a talent retention strategy. That might be like a customer acquisition strategy. Who knows? But it's just like some of those things where it's like, you probably didn't need to spend the money on that. I've messed up on that personally, honestly, a lot of times. And then also, I think it's pretty easy to just stay in touch with your investors. Like for me, I send quarterly updates to my LPs, tell them how things are going. Same as a founder, it's a company. Like you should be spending a lot of time like talking to customers, building the product. But I mean, if I just think of like, I love getting the first of the month in the morning. You just get that email of like, here's the past month, a couple bullet points, how things are going, share the information he feels necessary to share. You can spend 10 minutes on it or you can spend an hour or more. But even just like literally spending 5, like I have one founder who, he literally sent like a 2-sentence update. Like, we grew 46% this month working on closing the Series A. And that was the update. But it was helpful. So you're just sending like some kind of monthly cadence or quarterly cadence, weekly. Honestly, you can do whatever feels right for you. But investors can't help you if they don't know how things are going or what you need help with. So yeah, I would just stay in touch with them, communicate with them if you can, and don't spend money on dumb stuff.
Those are good pieces of advice. Last question here. What is the most common reason, now that you've invested into a lot of companies, you've probably seen some fail. What's the most common reason you see these startups fail?
Founders give up or run out of money. And sometimes it's like they raise the capital for something that they truly weren't passionate about and wanted to work on for a really long time, or they couldn't generate revenue from customers, or they spent the money on things they probably shouldn't have spent the money on. Those are all pretty nuanced things, but I feel like that's what I've seen the most across my portfolio. And then also when you look at like the data, like YC will put out studies, co-founder conflict is a pretty big reason, which is why I think it's important to meet all the co-founders and
It's the
just
most common one, I think,
get
statistically. Yeah.
Yeah. And that kind of comes into like, you've been grinding for 2 years and like one founder is like, I know we can get this. And the other one is like, I don't know, man. Like, I want to just go back and work at Google. Like that happens. It's a common thing.
A lot.
And like, sometimes that's okay, honestly. But it is a reason that startups fail.
For sure. All right, Turner, you put the fun in fundraising today. Thank you so much.
That is the
I'm excited
cheesiest line I've ever heard.
Founders.
Do you say that for every
put the
every
fun
guest?
in fundraising.
Oh,
Hey, for
nice.
somebody, I mean, you're the king of memes, and actually, that's a part of our marketing. We're going to be doing a lot of memes to get some of the attention out there.
Nice.
Anybody would be lucky to get capital from you, so definitely reach out. Where can founders find you specifically right now, and what is the best way for them to send you a pitch deck or an email or whatever it might be?
My email is turner@bananacapital.vc. You can, in the words of Kurt Signetti, the coach of the Indiana football team, you can Google me. Twitter will show up, LinkedIn will show up. You can add me on LinkedIn. Don't send me a message on LinkedIn. There's just a bunch. It's mostly spam, so I just don't always see stuff. I also have a podcast where, I don't know, it's less fundraising focused. It's more of like lessons from founders, things they've learned that have building their companies. Like founders of like Robinhood, Mercury, Dealbox, Samsara, pretty like across the board. Athletic Brewing, CPG company, Solugen, deep tech company, just like stuff they've learned. I like learning from it. So you can listen to that podcast if you want. And that's called The Peel. Again, if you just Google this stuff, you'll find it. Maybe you guys throw.
it.
Yeah, you said you're a pretty active listener. So.
Pitch, pass, iterated fast. Story beats data when the storyline's fast. Vision's the ignition, but the numbers steer the ride. Conviction and precision, watch investors collide.